Hello, good morning. I'm Staduk and I have spent many years inside the matrix of the stock market, respecting how the players who spend millions daily get in and out of positions. I know how they work because I'm the one who has designed their trading systems to outsmart even the most savvy fund managers. And believe me, there are some awful fund managers within this industry. My content will be designed to help you become a better version of yourselves as traders and also long-term investors. However, today we're going to go through how even as an institution, institutions too make some mistakes. And we made that same mistake on a stock quite recently. However, by quickly correcting that mistake, we was able to get back into the position trade, ready for the momentum. And I will show you that mistake and how we corrected this with RX. So RX came onto our watch list, dated back to, I think it was the end of January time, as just before its earnings release. Now, at this time, RX we thought was squeezing the 20-day moving average and beginning to break out, and that was roughly in or around January 20th on the Tuesday. Looking at the weekly chart at the moment, we began accumulating a position. However, we made one of the biggest mistakes that we've ever made, and didn't follow our own rules, which nearly cost us substantial losses. What we did is we got in and started building and accumulating a position on the January the 20th, okay, directly in line of a point of control, without confirming a developing point of control below as support. And what actually occurred was the price quite rapidly declined all the way back down to $3 over the course of four or 5 weeks. Now, the way in which we quickly corrected this, within this week we did set an area of which we wanted to get out of the position, and it was at the point at which the price did not close above the volume weighted average price on the Friday. So if we zoom in, Tuesday the 20th of January, okay, here Tuesday the 20th of January we began accumulating a position. Price rose to 483, directly in the line of fire of the point of control. On the Friday, price did not close or hold the volume weighted average price. Okay, on the weekly it shows a lot more clearer. On the daily it just shows a resistance candle. However, many traders would stay in this trade because it didn't close below the previous higher low, but it also didn't close above the previous higher high. So this was a hesitation in the trend. However, what we said was we had a squeeze at the anchored volume weighted average price in history at the highest high. We also had a squeeze on the volume, and we had a close above the 20-day and the 50-day moving average. If you were on the dailies, this is where you made the mistake. You stayed in the trade and the trade continued on down. If you zoomed out, you can clearly see let me just reset this for one moment. 20th of January, look at the volume weighted average price, look at the price. It closed below. Yes, it was supported, but one of the most important pieces of information that we made the mistake of not paying attention to the volume profile at price 480 to 490. We bought directly in the line of fire, expecting it to break out on the second test, and we were wrong. So how did we correct the mistake? We sold off our position and we took the very small loss of, I think it was 1.5% of the capital. We waited patiently for about 6 or 7 weeks before a developing point of control began to appear. Now if you look on the day of the earnings release, okay, in the first 2 weeks we began to see a point of control beginning to form. At this point it was 368, and at this point it was confirmed at 347. See that? Developing point of control, developing point of control. There it is, my apologies, developing point of control. So we marked it off, we began building the position 368, and we began adding position 348. We recently began to see the swing again, volumes down. We're at a substantial discount from current quarter's fair value price. 76% discount on the current quarter's fair value price. So, what do we expect to happen? Over the course of April, we now expect RXRX to show bullish intent, confirm the reversal, continue on up back towards T45, consolidate, break through, meet some heavy resistance roughly around $4.10, rebound, come back down, consolidate, break through, and retest 483. By making a small mistake and cutting our losses early, we've been able to get back into a position and now have an average gain of roughly 54, 29, 30% and 54. Okay, so you're looking at what? Potentially 40% on average, just by correcting the mistake early and being emotionally disconnected and saying to yourself, you were wrong, accept it, but don't walk away. Stay interested in the stock if you feel that there's still a good trade to be had, and there is. RXRX. Thanks for watching.